Good morning and welcome back to the Opportunistic Trader for January 25th, a Friday. I apologize for not giving more trades during this month. It has not been a great month again for us. We're hanging in. I don't know where we stand as far as our record, but right now we have no position, and I think we're kind of flat on the month. And we're going to look for some trades today on the short side. The market is up 21.5 points on the S&P. Although it looks really big, we went out at a $10 discount due to Intel's earnings that came out after the close that disappointed. They hit the NASDAQ and the S&P. So the S&P is about $12 over cash, and the NASDAQ is about $40, $50 over cash. So other than, that one or two semis, the market's up overall. The big news, I guess, out of the markets overnight was the news out of China that they're sort of doing a Draghi-esque type of thing where they are coming in and adding stimulus and really sitting on top of the market there to try to prop it up. Again, that works well for our core of what our thesis is, which is long China, short the U.S. The trade is working slightly this year, but we really believe when they do a deal, and if they do a deal, that it will cause the Chinese market to significantly outperform the U.S. market. It's underperformed it by over 30% over the last year and even more over time. So that's the trade we're looking at. As far as volatility in general on the day, it's back down to 18, which is the lowest levels that we've seen. We might have traded into the 17.5 area earlier this week, but overall we're on a weekly low in volatility, a weekly high on S&P. Other markets are sort of mixed. The big player is the DAX today, up almost 2%. So markets out of Asia up 1% to 1.5%. Probably get some follow through over the weekend. The DAX is up almost 2%, and our markets are up 80 basis points to 1% and change across the board. And looking at the stocks, it looks to me as though all of the technology is higher. Facebook up 1%, Apple up 1%, Netflix up 1.5%, Google up 0.5%, Amazon up 80 basis points. So overall, the markets are firm this morning. We are trading on weekly highs, and highs are the move. The market is up 6.5 to 7% for the month. NASDAQ a little stronger. Believe it or not, this will be the best January if we close in here since 1987. And we don't like to use 1987 because everybody knows what happened in 1987. And I remember it because I happened to be trading at that time, and I got into the business before that. I don't want to date myself. You guys could probably figure out how old I am. But my experience is 34 years in the business. And in 1987, I remember it very, very well. We had an unbelievable January. We rallied for most of the year to the point where in July of that year, we didn't have almost a down day for the whole month of July. I think there was one or two down days in the month of July. But at the end of that year, obviously the market crashed and the market fell apart. Coming into the end of August and September, volatility picked up tremendously and the market fell apart. So they're saying this is the best month since 87, and we know what happened in 87. The market rocketed to a big start and then fell apart. I'm not saying that is going to happen, but there might be some similarities to that market at that time. But overall, the main difference is that QE and the Fed and the I was reading something yesterday. They said on the day after Christmas that the Fed actually called CEOs of different companies and asked them to buy more stock. So I don't know if that's true, but it's pretty unbelievable if it is. Looking at bonds, they're still higher. They're down today 0.5 point, but overall on the week they're higher. S&Ps are higher. Um, Crude oil is not really doing much today, and
Larry,
gold,
take a look at gold and the dollar right now.
yeah, gold is
It's
going
rallied
back up.
$7 for no apparent reason, and the dollar just tanked a little bit.
Yeah, a
I know
little
what's
bit.
going
You know,
on.
it's funny. I actually haven't looked at the euro in a while, and it looked like it was about to break out of the range. Got to 112, like 80 or 90 yesterday, and now it's right back to 113 and a half.
Yeah,
Um,
it does have a historical tendency to sell off when Draghi speaks, and I guess maybe once Draghi's done speaking, maybe it kind of stabilizes a little bit. But who the heck knows?
yeah, that could be possible. I don't know. I didn't really read too much into his comments. I don't think it was any big news
No, no,
because,
no, no big news. But Mike and I talked about it yesterday. In every ECB session except one in November, the euro was weaker, and sure enough, it happened again. But maybe now it's a buy. As a trader, maybe now it's a buy. You know.
yeah, I mean, I'm shocked literally at the turnaround in the market. And I'm even more shocked considering what's going on in Washington politically and that the government is still closed and all of these things are still out there. And the China deal is, as Wilbur Ross said yesterday, which he probably doesn't even know, they probably kicked him out of the room, that it's
Miles and
miles
miles.
apart. Talk about a guy, just briefly, that's not in touch with reality. He, made comments yesterday that people that don't have money can go out and borrow against money that they're going to get paid later, which we know they can, but it's not a simple process. So, to get food on your table, to take a loan is, absurd. But I saw a comment from a big hedge fund manager today. It was funny. He said that if during this government shutdown, Congress and the Senate wasn't being paid, they'd stop the shutdown would be over in an hour. So
Exactly.
you got to stop. You should have a rule that if the government shut down, no one gets paid in Washington, and then believe me, they'll do a deal. They would take Trump. They would give Trump 8.5 billion, not 5 billion. So
That's a
that's
good point.
that's my thought on that, and I'll throw it to you on broad market comments. I don't know if
Yeah, I got to tell you, I'm not as prepared as I have been, because I just see everything as chronic, and now I'm watching the tape as opposed to the news. But I do want to make a comment on the very first thing you said, and I think people that listen to traders speak about their winners and losers. A lot of people who subscribe to sites, not our site, are looking for traders to be lack of a better word, superstars, and never self-assess when they're having a good or a bad day. You only hear the good news, and that's just marketing over good content. What we're doing here is what Larry did, and like I had a losing trade yesterday. The point is this: trading is short-term active trading is baseball, and by that I mean you just get another at bat every day. There's a new game, and you know although Larry is, if I may speak, as an observer, as a student of traders, for Larry to say we haven't had a lot of trades, things aren't good. I'm going to say this to him, and you know what? I mean this. You know, it probably was the good thing to not trade the last couple of days because I started out having two very good trades, and then my momentum system gave me two trades that gave me losers, and I don't have a problem with that. But it's how you bounce back from that, and I think the fact that you're here and you're able to trade every day and people are accessible tells you, when a person's not trading or a person's trading and losing money, but and they're able and they're accessible to explain why they're losing money or why they're making money or why this is good or why this is bad. You're getting some insight into the psychology behind trading. It's a marathon. People talk about investing as a marathon, not a sprint. Well, active trading is a series of sprints. And after every sprint, you've got to be able to take a breath and run again. And that's what we're doing here. You can't get married to your losers and you can't get married to your winners. It's a marathon, but it's a marathon of sprints. That's my 2 cents today. Other than that, I made my opinions pretty clear that I think the end of the world is coming during the gold fix. But so I'll just back off on that.
The
Anything you
end
want
of
to
the
add, Mike?
world. You better back up some gold in that truck. No,
Well,
I'm kidding.
that's funny, because the joke among gold people is, uh, 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 in fact, it's my joke is, hey, you don't want the end of the world to come if you own gold, because when the end of the world comes, you're not going to walk into a deli with a gold coin and say, give me a ham and cheese on rye. You're going to walk into a deli with a gun and say, give me a ham and cheese on rye. So you're going to want to own gold and hope that the world almost ends. You know what I mean? If you're that kind of a doom and gloom guy, I'm very scared that although we won't have although the likelihood of a military escalation in Latin America is incredibly small. The chronic crisis down there, I don't think will be ignored by the rest of the world, and I think that's going to weigh on the dollar and bolster gold, and I think it's going to buoy oil. And if you're a U.S. citizen, watch the price of gasoline and the price of heating oil, as Tracy Shukar pointed out this morning, and as traders know, when you go to a Citgo gas station, you're paying Venezuela. Citgo oil is oil from Venezuela refined here. And the point is, we get a lot of oil for refinery here, and a crisis in Venezuela is right up the alley. I mean, if you're invading Iraq because you're worried, and you've got Venezuela's Maduro being recognized by Russia, being recognized by China, and being recognized by Mexico, you got to be worried about that. You got to be saying, okay, the next thing is sanctions. So if you're playing that game, you might want to be long some out of the money calls in oil, some out of the money calls in gold, or you might want to just be careful of your position in dollar and stock exposure. That's really all I can say. Everything else is chronic, and we've been through it before. The end of the world is coming, and no one cares. I think is the is the statement made tongue in cheek.
Yeah, I don't know if that's the case. Yeah, we're
Wait, that it's not the
generally,
end of the world, or that it's not tongue in cheek?
well, it's not the end of the world.
All right, I know you have
But
a bunker down there. I know there's
oh,
a
I
bunker
know.
in Florida.
Actually brings to mind a buddy of mine who he has a small home in Canada in the middle of nowhere that he's telling me he's going to utilize at some point in time. So hopefully that's not true, but he's invested there.
I mean, yeah. Like,
Again,
can
I
you
don't.
really can we look at Venezuela and look at the situation there and not say it's a problem when Mexico, on the same day that they don't accept Maduro, on that same day they say, NAFTA 2.0, we're not too sure. that's that's not good. That's not good. That shows disharmony on the Western trading bloc.
Listen, I think the only way you're going to see any kind of social unrest or people freaking out is if the stock market gets tanked. And if that
No,
happens,
no argument there, my friend. No
and the
argument
funny
there.
thing is, when we did sell off at the end of the year, people were for the first time in a very long time getting hurt. But once again, they bought the dip or held on tight, and we're right back to where we were, and we're 8% from an all-time high and 13% or 12% from the low, and we're in the middle of the range, and everybody's okay again. And Soros had some interesting comments yesterday about China and the Cold War. He says this is a Cold War that's about to turn hot. I kind of agree with him in the sense that they are going to do a deal here, but the deal is not. It's not going to be anything that they're going to live with and basically, I wouldn't say honor, but just stay within. And the bottom line is, whether it's a month or a week, Trump is going to come out and basically go crazy and try to deflect all of the rhetoric that's going on. But I do believe that something will come out because it has to, and I don't know what that is. So it'll be interesting to see how that plays out. But as far as the world in general, the world is not a great place. We're in a situation in a society, even though our government's closed and no one can get along. At least There's no social unrest, and really nobody's covered this, but what's gone on in France and is still going on moderately in France with the yellow vests is a huge issue, along with all of the stuff in South America and Mexico. Uh, there's unrest, obviously, in the Congo, and countries in Africa, and we're sitting back in a society that things are good, but it's Trump-esque, meaning Trump's whole mantra is to never admit he did wrong and to never say anything is bad. And really, that's how our country exists in a way. I mean, we never stay with anything too long, going from, events like 9/11 to the Parkland shooting to everything. The bottom line is people forget very, very quickly. So that's the country that we live in. Markets are higher. Uh, Everything looks very, very stable, but we'll see how. It's a long year. It's the first inning. We happen to be up probably the most that we've ever been up since I've been in the business, or close to. So it's a great start to a year, but you don't know where the year is going to end. And this could be the year. And, you could say this every year, so it doesn't really have that much validity. But this could be the year where we have that complete dislocation. It's just, from what I see outside, from people that work for, RIAs or money management firms, most of the money is outsourced. They don't even know where it is, and they're not looking at it on a day-to-day basis. And that's very different than the way the business was 10 years ago. And everyone comes up with, oh, we're in it for the long, you've heard it, we're in it for the
Yeah.
long term.
Yeah.
We're in it for the long term. So who knows?
Well, your comment about RIAs, people in the past would say the retail is buying. Well, there really isn't a lot of retail anymore. What you really have now is you have RIAs, which are very professional, very highly regulated investment managers. And what they're doing is they trade CTAs. So the retail, which will be the doctor, lawyer retail, gives money to the RIA. The RIA allocates it to a CTA, and they have a portfolio of CTAs that they trade like stocks. So the money's always invested, but it's in with different CTAs. So if you're looking to see what the retail's doing, in quotes, I say retail, you want to be looking at what CTAs are doing, to Larry's point. And they are, although they may be trading back and forth from CTA to CTA, they are no longer hot money going in and out of the stock market. It's the algos, as you've implied many times in the past.
Hey Vince, for those who didn't tune into the gold fix and just tuning in right now, tell us, gold has popped. Dollar was weaker overnight. Has euros picked up a few pips, but really gold is up about $7 now. It's up $8 on the day. Really done about $6 in the past few minutes. What's your thoughts here? We're right in the middle of this 1280, 1300 range. Any idea?
Yeah, I have, I have active levels to trade, and one of them is, well, my levels were, because we are in a range between the inside range. If you're a range trader, right, you're a seller between 1285 and 1270, and a buyer 1279. Between 1285 and 1288, I call that a dead zone. Above 1288, and I'm not just giving you a number. My numbers are time based, not technically based. Above 1288 on a uh, time settlement of, say, 2 hours from now, you want to be long. And if it goes back below 1288, you want to consider reversing and being short or stopping yourself out. The problem with my system is, even though it'll give me a good trade to do, like right now, I cannot buy gold unless it's above 1288 8 minutes from now. The problem is, if gold's trading 1299 8 minutes from now, I get a buy signal, but the risk reward is atrocious. So the solution to that uh, is uh, uh, is for me to hope, number one, that the market stays between 1288 and 1290. Basis February, I'm looking at. I know people are looking at April now, but I'm looking basis February still. And if it does stay between 1288 and 1290, I'm going to buy it with a 1285 stop. When you see gold And more importantly, right? Because gold is really just a proxy for the dollar. When you see the dollar move the way it just has, and gold move the way it just has, and nothing else is moving, to Larry's point, it's almost like there's an order coming into gold in the short term, and it's just getting front run. So this gold could end up down today, but the point is, today it might be a good active trade. And today's the type of day that I would see a guy like Larry. In fact, I've seen Larry do this before. Step in and make $7 regressing to the mean on a reversal trade, while I'm making $3 on a momentum trade. Today might be the day to trade gold. What I think is interesting, pivoting off of gold but staying on the FX side, which is something that I think you should speak about, is my conversation with the audience this morning about the risks, the global risks, and the fact that people are too complacent. I think, especially the investor class that's retiring. I want to buy gold here, but my intuitive side, my non-systemic side says, why isn't oil up? Right? I mean, the dollar's down, stocks are stable. Why isn't oil up? Oil should be up if gold is up and the dollar's down, and it's not. So I'm kind of sitting on my hands here. I mean,
Well, they take that out of the algorithm, and that's, we're going to speak a little bit on that today on Wealth 365 at 10 o'clock. And really the gist of what we're doing is talking about algo trading and how algos have changed the market. And really a lot of what has happened here is they're taking clues or puzzle pieces and they're leaving a piece out. Like it was never like this 10, 15 years ago. So like if you're queuing off of oil today, it's not worth it. It's
Right.
just non-trade. And what happens here is the market's up 25 S&P points, breaking out to the highs of the day, and NASDAQ's up 100, and things look like they're exploding up, which is people got caught last night. A lot of this is shorts from last night because Intel came out with numbers that will look terrible, and the technology sector was getting hit after the close. And now for some reason, and I don't know, it's funny, they're saying it's China related, but China's up, but it's up 2%, 1.5%. I mean, it's not, for China, China's not really moving. But the point being, so now oil a minute ago was up 3 cents, it's up 13 cents. All of a sudden you're going to turn and oil you're saying, holy cow, I want to sell oil today because relative strength wise, it's the weakest thing on the board versus the S&P.
Right.
So if the S&P comes in, you would think that you could make money being short oil. But what happens is the algo is a full vehicle. So what happens now is as the SPOO comes in, oil gets a little weaker, and then they utilize oil later in the day to pop up, and that'll rally the SPOO to a new high because oil popped up. So you have to be careful of what they're looking at. And you can equate it to gold even today. Yeah, the dollar's up, but it's not going crazy in any way.
No, the dollar was up. It's now down.
Yeah,
That's
I'm
my
saying,
point.
but the
It
dollar,
doesn't
meant the euro is up. But
Oh, okay.
it's up not a lot, but
Nothing crazy.
gold is up and then the bonds are down. So yesterday the bonds were higher and gold was lower. Usually gold and
Well, usually
bonds
gold
are
does
moving
nothing. Let's be fair.
in sync with each other. Literally all this is gold is right back to where it was a week or two ago. It hasn't
Right.
broken 1,300. It broke down almost through the lows yesterday of the move, and now we're back in sequence to where we are. So,
Larry, looking at the levels, I just asked Vince about gold. What are you looking at today in S&P? It looks like this week we've tried twice to break below 20 on the short side. Stopped around the 15 level twice and back high. What are your thoughts here?
maybe trading short above, if it pops up above 65. Again, the problem that you have here is the market's up a lot, but all these foreign markets are up more. So we always play catch up. So inherently there'll be a bid. Also, you have to be careful today or every day of fake news. So they always throw fake news in. But overall, do you have the weekly high on the S&P intraday? I mean, we got to be in that area somewhere.
We actually started the week. We closed on the high last week, and then remember it's a short week. Intraday high I'm showing as
Oh yeah, I forgot we traded higher
like
earlier.
66.
Right. If you're looking for, while you're looking at that, I'm just going to throw
66.
this out there. If you're looking for an event that actually makes sense, today, based on some assessment of latest Fed discussions, they're indicating that the bond portfolio that they have runoff could end much sooner than expected. Next week's FOMC meeting could yield clues. Here's the explanation for today's move right now, and I'm flexible to change my mind. The dollar is weaker, gold is higher, stocks are higher. Forget oil for this moment, right? And say, why could that make sense? It makes sense because QT went from being on autopilot in 2018 to being flexible to being, it could end a lot sooner. And I think the markets are reacting to that. QT, if you're not familiar with it, quantitative tightening. That's something that makes the dollar stronger, and at the same time offloads bonds, and that's actually a weight on the stock market. Ending QT would be bullish for U.S. stocks as well as emerging markets, even more so. I think we could be seeing a short covering reaction to that, and like you said, Larry, you can't look at one market and a rally in $10 in gold is nothing. It's just in a range it's been in for 5 years. A rally of 20 handles in the S&P is nothing. It's in the range, but I think the market's starting to price in more hope of the end of QT, and that's what I'm pulling off the wires right now.
I don't know if that's the case. I mean, the Fed, what we were looking yesterday, and I think the jobless number was the lowest number in 50 years. So I don't know why. I mean, I do know why the Fed, their hand was forced. They had to make the raise because Trump, boxed them in the corner. Now they freaked out because the market freaked out. They're done. But the truth is, really, not a lot has changed for them to have 3 tightenings this year to 0. Nothing has changed. The growth is still the same. We're in a government slowdown, and that's sort of what I see here.
No, I think you're right. I'm just telling you what's coming off the wire right now. There's a Wall Street article out right now that just hit the wires. That's basically saying there are definite alarm bells coming out of the Fed that they may be ending the runoff much sooner than expected. Next week's meeting could yield more clues. So if the Wall Street Journal is writing it, it's already been on the wires. I've seen it. So that, there's some speculation, legitimate speculation. We'll call that conjecture, that for whatever reason, like you just said, the jobs number does not bode for an end to QT. Meanwhile, today, the market is reacting. For active traders, it's important to know this, but from macro traders, it means nothing. But the market's stronger, I think, right now because we're looking at a Fed that might stop the runoff, which means they might keep the dollar tight, interest rates tight, but they might stop selling bonds into the market.
But my question is why? They need to get out of the balance sheet. They've now bought a free mulligan, I guess, because the market's rallied 12% or 13% off a 20% down move. Why wouldn't they continue to run off the balance sheet and get out of this trade?
Assuming that's not a rhetorical question, the answer to me is basically and here I'm reading again. Overnight, China announced further liquidity injections. Okay, so that helps their stock market. The Fed dropped a hint today that it might be ending QT, so it ends the week. But your point about market fundamentals, yeah, the market fundamentals haven't changed. So why are they thinking that? Assuming your question is not rhetorical, who knows? But let's just try and think about it. Maybe Powell's looking at a global situation. Maybe he's looking at a protracted government shutdown. But he's not saying he's not going to keep raising rates. See, QT's got 2 parts for people who out there who are new to this. QT has 2 parts. It is raising interest rates which strengthens the dollar, while offloading the bonds. So the balance sheet removes its debt at the same time it's raising rates, trying to keep the whole thing stable. It's called sanitizing your debt issuance. the opposite of QE. So if they continue to raise interest rates but stop letting bonds run off, they're basically saying we're going to raise rates, but at the same time we're not going to be issuing more debt. That's a little bit bearish for the dollar and very bullish for stocks. I mean, there's two legs to QT, and I don't know. I really don't know the answer to that question. I just know that that's a hint. It could be a flyer. It could be rhetoric that they're using to just manage market expectations. You and I both know that they've been doing that for years. But the market is reacting to it right now, and it's noise in the big picture, as you said. But today, for an active trader, it's important to pay attention to. Do you want to fade this rally? Like you said, I would love to see the market come off, and then if oil takes a leg higher, stocks are probably going to scream higher. That's a nice game plan. You know, I'm looking at that. That makes sense.
Yeah. So we'll keep an eye on that. The schedule for the day, we had the gold fix earlier at 8. The AM roadmap. At 10 o'clock, we're going to be coming on, and Larry's going to be discussing how the markets have changed over his career, starting from trading on the floor to trading on the screen to, his trading with Banyan and trading now. So we'll be talking with that. That's actually going to be part of a webinar with Wealth 365. It'll be simulcast with and then at 12 o'clock, we have Commodity Research Group, Ben Ryan joining options. Schedule. Any closing thoughts, Larry?
No, I think the market is pretty tame. Volatility is now under 18, lowest level. Market has a bid. A lot of people went out, biased long. It didn't look good overnight, but overall, the market has changed. You got to take a little of this rally away, maybe about 8 or 10 points to get to fair value. So the market made up fair value, and the technology stocks, especially the semi-chip makers, are still ripping, even though Intel has missed. Micron is back to $37. It traded $28 on Christmas Day. So these stocks have ripped. NXPI is, in the high 80s. It was in the high 60s. So stocks are up 20 to 40% off the lows in pretty much a month. So that's the mantra. Hopefully we get an acceleration to the upside. We might trade to the short side. But right now we're sitting on our hands and waiting to see what happens. And there's not a lot going on. Just a quick one. I'm looking at natural gas back down to 3. It seems like it's always at 3, other than when they blew that guy's doors off that was short. I mean, literally one guy caused the market to rip 45, 50%, maybe more, because of positions. And I'm wondering, just the thought, the clearing firms know these positions. How do they rip a guy like that and then just carry him out, and then the market just trades back? It's awesome. So that's a question. That's a question.
I mean, people get front run. It's a question that we kind of know the answer to.
Exactly.
I want to throw this out there. Not making too much about gold, because historically, when gold and the stock market rally, gold gets capped and stocks keep going. That said, I just put on a position in the chat room, long Feb gold with a stop at 1285 area. And beware, below 1285, it could reverse. Might be your type of level to short, Larry. But just so you know, we have an alert that we gave to people this morning, and we put a position on. And it seems stretched, but I'm going with the system. Risk 1 to make 2, long above 1288, and we'll see what happens.
That sounds great. Also, on Monday when we do the morning call, we're running over today, but I wanna discuss crypto. I want to spend a little time talking about that and what's gone on there, and
happy to do it.
What the next moves are. So we'll do that on Monday. I wish everybody good luck trading today, and we will see you in the chat. And Vince, thank you, and Mike, thank you.